Saxo Capital Markets, joining us from our city studio at OCBC Singapore. Christopher, good morning to you. So the Dow and S&P back at records high. How long do you expect this bull run will last?
You know, if we get some surprisingly hawkish comments from the Fed in the near term, or see yet a much stronger US dollar, it could prove a bit disruptive. But the good thing is that companies in the US still have very solid earning growth, and we currently see record announcements of new buyback programs of stocks. This combines with low yields, low energy prices should still support stocks, and I see another 10% for the year.
All right, after 15 years, the NASDAQ is back above the 5,000 mark. Are you expecting a bubble?
You know, when I speak to investors, I don't see any kind of euphoria building. Tech companies are in a much more healthy position than they were 15 years ago. Today, valuation is based on real earnings, which .com companies did not have back then. The valuation of the NASDAQ is only around its 10-year historical average, so not too bad there. And I also have to say a lot of the performance from the NASDAQ actually comes from phenomenal growth in biotech sector.
All right, so what's next, do you think, for NASDAQ? 6,000 or plunge?
I think, you know, even though the NASDAQ is near its all-time high, as you say, then many companies still have very important catalysts in place for further upside. And if we look at unique companies like Tesla, Netflix, Salesforce.com, then they're all companies that are revolutionizing their industries. So, you know, I also think that the major tech companies like Apple, Microsoft and others have big piles of cash that they can use to buy into other interesting companies, and this will support NASDAQ going forward.
Okay, will Friday's U.S. jobs report for the month of February disappoint?
It's a good question. It's an open question whether we'll see another 200,000 plus worth of job gains, but that would be the 12 consecutive months and a big achievement. There are some short-term factors that may be a bit difficult. We have record levels of snow in the northeast. We have the port strikes on the west coast. And, you know, we also have to remember that the non-farm payrolls is a pretty volatile figure, and it could see upcoming revisions. But I still think we'll see a pretty positive labor report.
Do you expect the first Fed funds rate hike in September this year?
Well, you know, the major hurdle to raising rates right now is low inflation, and the Fed says that the timing will be data dependent. So I think, you know, if we see another strong labor report on Friday, then you could probably see Fed removing patient from their March or April statement, and that will leave the door open for a hike in June. On the other hand, if it's a very disappointing figure, we may see lift up postponed till September. Okay,
back here in Asia, Christopher, which sector you think will benefit from China's rate cut?
You know, I think automobiles, consumer durables will see an increased demand due to lower rates. But of course, also the important property sector, it will benefit both developers and home buyers with lower rates. If the property sector should start to improve, then there will be a lot of secondary effects that will start to filter through more broadly to the economy.
Okay, one last thing, Christopher, your investment strategy with regards to equities now?
Well, we do like European equities a lot. I think that, you know, the ECB is now launching their QE package, and it's a major package that is not fully priced into stocks. Valuation and sentiment indicators in Europe is not stressed, so Italy and Portugal are very far from their long-term highs, and we see major potential for some markets in Europe, maybe up to 40% this year.
All right, Christopher, thank you very much, and enjoy the rest of your Wednesday morning. Christopher Moltke-Leth of Saxo Capital Markets joining us live there at our city studios.